You found the order block. Price returned to it perfectly. You entered, and then it just melted through. No bounce, no reaction. You got stopped out, and then it reversed. Sound familiar? The problem wasn't the zone. The zone was right. The problem was you entered without waiting for the one thing that tells you institutions are actually defending that level. Today, I'm going to show you exactly what that confirmation looks like. There is one filter that separates every high probability SMC entry from every guess. It is not a new indicator. It is not a complex algorithm. It is a single candle, or sometimes two, that appears at a zone and tells you what the big money is actually doing. That candle is your confirmation. Without it, you have a zone. With it, you have a trade.
Before we look at the candle patterns, let's understand what they are actually measuring. Every candle is a battle report. The body shows who won, bulls or bears. The wicks show how far the losing side pushed before they were rejected. At an SMC zone, the wicks are the most important part of the candle. A long lower wick at an order block tells you that sellers pushed in, hit institutional buy orders, and got completely absorbed. That absorption is what we're looking for. There are 3 confirmation patterns that work at SMC zones. You do not need to know all 30-something Japanese candlestick patterns. You need to know these 3, because these 3 are the PA signature of institutional order flow. Pattern 1, the pin bar. Pattern 2, the bullish engulfing. Pattern 3, the inside bar breakout. Each one tells a slightly different story. Let's go through them one by one.
The pin bar. A small body near the top of the candle's range with a long lower wick that represents a deep test of the zone. Price entered the zone, sellers pushed in aggressively. That's the wick extending down. And then institutional buyers completely absorbed the selling pressure and drove price back up. The close back above the zone boundary is what makes this a valid signal. The wick length should be at least twice the body. The close must be at or above the 50% level of the full candle range.
The bullish engulfing. 2 candles. The first candle is bearish. It represents the final push of selling pressure into the zone. The second candle is bullish, and it completely engulfs the body of the first. It opens below the first candle's close and closes above the first candle's open. This pattern tells you that in a single session, buyers overwhelmed the entirety of the previous session's selling. That is a powerful statement of intent. For entry, wait for the second candle to close. Never enter mid-candle. The inside bar breakout. This is the stealth pattern, the one most traders miss. An inside bar forms entirely within the range of the previous candle. It represents indecision, a pause, a coiling of energy at the zone. When the inside bar breaks out to the upside, it is the institutional accumulation phase resolving into directional momentum. The entry trigger is the break of the inside bar's high. The stop goes below the inside bar's low. This is the tightest risk-reward entry of the 3. Now let's put the zone and the confirmation together. This is the fusion point, where SMC structure meets PA execution. Here is the rule. You never enter an SMC zone. You enter a confirmation candle that forms within an SMC zone. The zone tells you where to look. The candle tells you when to act. These are 2 separate decisions, and the second decision, the candle confirmation, is what most SMC traders skip. That skip is what produces losing trades at correct zones. Now let's put the zone and the confirmation together. This is the fusion point, where SMC structure meets PA execution. Here is the rule. You never enter an SMC zone. You enter a confirmation candle that forms within an SMC zone. The zone tells you where to look. The candle tells you when to act. These are two separate decisions, and the second decision, the candle confirmation, is what most SMC traders skip. That skip is what produces losing trades at correct zones. The confirmation hierarchy. Not all confirmation candles are equal. The highest probability setup is a pin bar that forms at the confluence of an OB and an FVG in the discount zone. That is 3 SMC filters aligning before a single PA trigger. The medium probability setup is an engulfing at a standalone OB in a neutral zone. The lowest acceptable setup, still tradable, is an inside bar breakout at any valid SMC zone with clear liquidity above. Below that threshold, no trade. Live chart example, 3 setups. I'm going to walk you through 3 real chart moments. 1 pin bar at an OB, 1 engulfing at an FVG, 1 inside bar at a breaker. For each one, I'll identify the zone first, then show the confirmation forming, then show the entry and stop placement. Watch how the stop is always placed on the other side of the confirmation candle, not the zone. That is what keeps losses small when a zone fails. The invalidation rules. Every confirmation has a hard invalidation. For a pin bar, if price closes back below the zone boundary after entry, the setup is invalid. Exit immediately. For an engulfing, if the next candle closes below the engulfing candle's 50% level, exit. For an inside bar breakout, if price re-enters the inside bar's range after the breakout has failed. Exit. These rules are not optional. They are the difference between a $50 loss and a $500 loss. Here is the complete confirmation checklist. 1. Identify the SMC zone, OB, FVG, or breaker. 2. Wait for price to return to the zone. 3. Watch for one of the 3 confirmation patterns, pin bar, engulfing, or inside bar breakout. 4. Confirm the candle closes, no mid-candle entries. 5. Place entry and stop according to the confirmation candle, not the zone boundary. 6. Check the confirmation hierarchy. Is this a high, medium, or low confluence setup? Only trade high and medium. 7. Set the invalidation level before entering. The free resource for this video is the Candlestick Confirmation Reference Card, a printable 1-page PDF showing all 3 confirmation patterns with their entry rules, stop placement rules, and invalidation levels. It also includes the confluence probability ladder from today's video. The link is in the description. If this video clicked for you, Video 10 is where we take this confirmation framework and apply it to live market structure, building complete trade setups from HTF bias all the way down to the LTF entry candle. The link is at the end of this video.